The growth momentum in India continues to be what it was. In other words, the growth momentum continues to be strong. Looking at the momentum of economic activity, looking at a few early data points which have come in, a few early indicators, I can say that the second quarter GDP number, as and when it is released at the end of November, in all probability will surprise everyone on the upside.
These words of RBI Governor Shaktikanta Das against a bleak global environment indeed offered a pleasant surprise. But in the same breath, the governor expressed concern on the evolving geopolitics and new flashpoints, not just for India but for the entire world. Speaking at the Business Standard annual BFSI Insight Summit, Das, however, said that India is better placed to deal with risky situations. The RBI in its previous MPC had projected India's GDP growth for Q2 FY24 to be at 6.5%. Governor Das also talked about India's inclusion in the JP Morgan Bond Index and termed it a double-edged sword.
Inclusion of India in the JP Morgan Bond Index is their decision. And the first thing that has to be recognized in this is that it's a kind of a vote of confidence about the Indian economy and about the Indian financial markets. Obviously, when you are included in a bond index, it works two ways. It leads to inflow. I mean, the JP Morgan, they have given an estimate of $25 billion to come over a period of time, and all that is expected. But the other side, on the other side, it's a double-edged weapon. I mean, it's a double-edged sword. That is on one side. The other side, as you know, when there are, there are quite a number of passive investors who get, who are mainly sort of influenced by your weightage in the index. So the reverse can also happen. When your weightage goes down, the passive funds will immediately tend to move out, or if there is some other development globally happening, it can, there can be outflow of funds. And in this regard, I would like to mention that RBI has a track record over the years, and especially in the recent period, of handling large-scale inflows and large-scale outflows.
With the general elections coming up, the impact of elections on the economy and domestic markets has been the talk of the town. The panelists largely agreed that there is no direct correlation between elections and the economy.
The 5-year returns that you quoted matter is what is the economic progress during that period, right? So how are economic policies that are being framed beneficial for the markets or not? So I think that is the main point. Historically, there have been concerns whether a single party comes in power or the coalition comes in power, and there could be different outcomes for the economy. But history has proven that also not to be true. So even some of the coalition governments have actually had most forward-looking economic policies.
Elections have not necessarily led to any significant change in economic policies. And I think the same thing applies today. As Naren mentioned, it could create intermittent volatility. But to the extent that there is no directional change in the macroeconomic policies being pursued in the country, it should not necessarily impact financial markets.
Mahesh Patil, however, pointed out that the Indian markets might face volatility from the global front.
The real risk volatility is coming in from the global front. I mean, that's where the bigger concerns are, whether it is global slowdown or the high interest rates. And that's going to be a part and parcel, I think, whether it is pre-elections or post-elections.
However, the RBI governor's words in this case were reassuring.
In the case of India, I would like to believe that given the overall macroeconomic stability and the financial sector stability that we have, even the passive investors, the world has changed. The passive investors are also looking at other aspects of an economy, the nuances of an economy, the strength, the strength and the underlying fundamentals of an economy. So therefore, I don't think we will see that kind of volatility. But should something like that happen, I think RBI has the capacity to deal with it and deal with it effectively.
With India poised to become the world's third largest economy by 2030, as per a S&P Global report released recently, the issue of inclusive growth for all was discussed at length.
K-shaped recovery is one of the things that economists have pondered on the most since the pandemic started. And we like to think of it in a couple of different ways. One is that some sectors clearly emerged as winners and others didn't do so well during the pandemic and after that. And different kinds of households also did come out with a differential impact on their income and their consumption levels after the pandemic. A lot of what Tamalda was just talking about does resonate. We see that there is a lot of unevenness as far as demand is concerned. Richer households are clearly consuming a lot of high-end products, which is what is showing up in these imports of dragon fruit and alcohol. And while a lot of not so well-off households do seem to be struggling, especially in high inflation phases, I don't think that it's entirely gloom and doom for that part of society either. I see a lot of aspiration and I see that there is a lot of, consumption at that price point.
Sonal Verma, chief economist for India and Asia ex-Japan at Nomura, said that inclusive growth is not a challenge limited to India but is rather a global challenge. She said that the concept of inclusion needs to be more broad-based than income inequality and that in some sectors like employment and education, there is still work to do.
If you take a step back, I think this is actually a challenge globally. This is not just about India. And over the last decade and more, the role of technological changes, globalization, financialization has actually increased income and wealth inequality worldwide. So a number of countries are actually facing this challenge, and of course India is as well. Second, I think the concept of inclusion, and this is something that Abhik was referring to, is more broad-based than just income inequality. There are multiple, it's a multi-dimensional concept, and when we talk about inclusive growth, it is of course, income inequality, but we have to also look at, access to health, access to education, employment opportunities, entrepreneurial opportunities, financial inclusion. So there are multiple dimensions to inclusive growth. The parameters, for instance, access to maybe health, crop insurance, social security on, rural employment guarantee, I think India is making progress. And then there are certain other aspects of inclusion, such as employment opportunities, maybe even on education, where there's still a lot of work to do.
At the Business Standard BFSI Insight Summit, panelists agreed that the country is on a strong growth trajectory. And as Governor Das pointed out, India is better placed to take on risks emerging globally. The experts also agreed that in the nation's economic future, inclusivity will play an important role and the rural-urban divide will need to be bridged.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.